In 2010, a man made a decision that would later become one of the most expensive purchases in history. He spent 10,000 Bitcoin on 2 pizzas. At the time, it didn't seem crazy. Bitcoin had no real value, no one really understood it, and almost nobody believed it would become anything serious. But today, those same 10,000 Bitcoin would be worth hundreds of millions of dollars. And the strangest part is, the man who made that decision wasn't stupid. He wasn't reckless. He wasn't even wrong at the time. Because what he did reveals something much deeper about money, value, and how opportunity really works. To understand this story, you need to go back to a time when Bitcoin was almost meaningless. In 2010, Bitcoin wasn't an investment. It wasn't a trend. It wasn't even considered money. It was just an experiment. A small group of programmers and enthusiasts were exchanging Bitcoin online, not for profit, but out of curiosity. There were no exchanges, no institutional investors, no headlines. Bitcoin didn't have a price in the way we think about it today. You couldn't walk into a store and buy something with it. In fact, most people didn't even know it existed. At the time, Bitcoin was closer to a hobby than a financial asset, and because of that, its value was almost entirely undefined. One of those early adopters was a programmer named Laszlo Hanyecz. He had been mining Bitcoin on his computer, collecting thousands of coins at a time, not because he thought they would be worth millions, but because it was interesting. At some point, he had an idea. What if Bitcoin could be used to buy something real, not traded online, not sent between users, but used in the real world? So he made a simple post on an online forum. He offered 10,000 Bitcoin in exchange for 2 pizzas. No negotiation, no bidding, just a straightforward offer, 10,000 Bitcoin for food. At first, nothing happened, because no one knew how to price Bitcoin. Was 10,000 a lot? Was it nothing? There was no reference point. Eventually, someone accepted the offer. They ordered 2 pizzas for Laszlo, and in return, received 10,000 Bitcoin. That moment became the first known real-world Bitcoin transaction, and at the time, it felt completely reasonable. The pizzas were worth around $40. And the Bitcoin? They were just numbers on a screen. Looking back, it's easy to think this was a mistake, but in reality, it made perfect sense. Because value is not fixed. Value is based on belief. And in 2010, almost nobody believed Bitcoin had a future. There was no guarantee it would survive, no guarantee it would grow. It could have disappeared completely. In that context, spending Bitcoin on something real wasn't a loss. It was progress. Laszlo wasn't trying to make money. He was trying to prove something, that Bitcoin could function as a currency. And in that sense, he succeeded. But then something changed, slowly at first, then all at once. More people started paying attention. Developers improved the system. Exchanges began to appear. Bitcoin got a price, then it got volatility, then it got attention. And as attention grew, so did belief. And as belief grew, so did value. What once seemed like a meaningless digital experiment started becoming something else, an asset, a store of value, an opportunity. Over the next decade, Bitcoin went through cycles most people couldn't even imagine. It crashed, recovered, exploded, collapsed again, and then rose even higher, from fractions of a cent to dollars, from dollars to hundreds, from hundreds to tens of thousands, and eventually to levels that changed lives, which means that those 10,000 Bitcoin, once traded for pizza, became worth something unimaginable, hundreds of millions of dollars. Today, this story is often told as a joke, the man who spent hundreds of millions on pizza. But that's not really what happened, because no one at the time could see the future. And that's the part most people miss. It's easy to look back and judge decisions with perfect information. But in real time, things are never that clear. Laszlo didn't lose money. He made a trade based on the information available. And that's what everyone does, every day. What makes this story powerful is not the number. It's the pattern. Because moments like this happen all the time. People overlook new technologies. They underestimate early opportunities. They ignore things that seem small because they don't look important yet. And by the time something becomes obvious, the opportunity is already gone. Bitcoin wasn't the only example. The internet, social media, artificial intelligence, every major shift looks insignificant in the beginning. When something succeeds, it always feels obvious in hindsight. Of course Bitcoin was valuable. Of course it would grow. Of course, it was a big opportunity, but that's not how it felt in 2010. Back then, it felt uncertain, experimental, risky. And that's the illusion. Success always looks clear after it happens. But before it happens, it looks like nothing. There's another side to this story. Being early is not always rewarded. In fact, being too early can feel exactly like being wrong. For years, Bitcoin didn't move much. It wasn't stable, it wasn't trusted, it wasn't widely used, which means holding it required something most people don't have: patience, conviction, and tolerance for uncertainty. The deeper lesson of this story is about perception. Money itself doesn't have value. Value is assigned, and that assignment changes over time. Gold wasn't always valuable, paper money wasn't always trusted, and Bitcoin wasn't always worth anything. What matters is not just the asset, but what people believe about it. Because belief creates demand, and demand creates price. So what does this story actually give us today? Not a prediction, not a formula, but something more useful. A way to recognize how value starts. Because if you look at Bitcoin in 2010, it had a few very specific characteristics. It was difficult to understand, mostly used by a small group of technical people, not taken seriously by the majority, and disconnected from everyday life. That combination matters, because many early-stage opportunities look exactly like that. Not impressive, not polished, and not immediately useful. If you try to extract something practical from this, there are a few signals that tend to appear early. Not guarantees, but patterns. The first is asymmetry, something that costs almost nothing to try, but has a very large potential upside. The second is misunderstanding. When most people dismiss something, not because they studied it, but because they don't understand it. The third is early communities, a small group of people building something, not because it's profitable, but because it's interesting. The fourth is lack of a clear use case. At the beginning, important things often don't have a perfect explanation. But there's an important balance. Not everything early becomes valuable. In fact, most things don't. Which means the real challenge is not just awareness, it's judgment. Understanding that some things are early and important, some things are early and irrelevant, and in real time, those can look almost identical. The biggest opportunities don't arrive with certainty, they arrive with ambiguity. And ambiguity is easy to ignore. The man who bought pizza with Bitcoin didn't fail. He interacted with something before it had a clear definition, before it had a price, before it had a place in the system. And that's where all new value begins. So instead of asking, what is the next Bitcoin? A more useful question might be, what exists today that is hard to understand, is dismissed by most people, is only used by a small group, and doesn't yet have a clear role? Because that's often where new value starts. I'm curious what you think. Did this story change the way you look at opportunities? And more importantly, what is something today that you feel might be early, but most people are ignoring? Let me know your thoughts in the comments. And if you're interested in understanding money beyond the surface, how value is created, how opportunities form, and how people actually build wealth over time, this channel is built around exactly that. Subscribe for the next video.